Credit Suisse, a Swiss bank that was recently taken over by UBS Group after a financial crisis, is facing new allegations of helping wealthy Americans evade taxes for years, even after it pleaded guilty to criminal charges for the same offense in 2014. According to a report by the U.S. Senate Finance Committee, released on Wednesday, Credit Suisse violated the terms of its 2014 plea agreement with the U.S. Justice Department by continuing to conceal offshore assets and income from the IRS, using various methods such as using sham entities, destroying records, and delivering cash by hand. The report is based on a 2-year investigation by the committee and cites 2 former Credit Suisse bankers who are working with the U.S. government as whistleblowers. The whistleblowers claimed that the bank still holds undisclosed accounts for American clients worth billions of dollars, including nearly $100 million in secret offshore accounts belonging to a single family of American taxpayers and more than $220 million in offshore accounts belonging to A.U.S. businessmen. The report also accuses the bank of a possible ongoing criminal conspiracy and raises questions about the legal and regulatory consequences for both Credit Suisse and UBS Group. The report says that the bank failed to cooperate with authorities when they requested information and did not disclose its cross-border activities as required by its plea deal. Credit Suisse said in a statement that it does not tolerate tax evasion and that it has implemented extensive enhancements since 2014 to root out individuals who seek to conceal assets from tax authorities. The bank said that the report described legacy issues that have been addressed since then and that it is actively cooperating with the Justice Department and other U.S. authorities. However, the Senate Finance Committee said that Credit Suisse's cooperation was inadequate and that it received new information just this week from the bank about additional American undisclosed accounts that the bank held after 2014. The committee also said that it is unclear how much potential liability UBS Group is exposed to as a result of the report, but a lawyer for the whistleblowers argues that the bank should pay as much as $1.3 billion in penalties for its tax evasion scheme. The report comes as Credit Suisse is being sold to rival UBS in a $3.3 billion deal brokered by the Swiss government earlier this month amid turmoil in the global financial system. The collapse of 2 U.S. banks unleashed fears that hit Switzerland's second-largest bank, whose shares tanked and whose customers pulled their money. The report also adds to Credit Suisse's long list of troubles, which range from hedge fund losses to fines for failing to prevent money laundering by a Bulgarian cocaine ring. The report calls for more oversight and enforcement by the U.S. government to prevent tax evasion by foreign banks and urges Credit Suisse and UBS Group to comply with their obligations under their plea agreements. The report also warns that tax evasion by wealthy Americans harms the public interest by depriving the government of revenue needed for public services and programs. Tax evasion is not a victimless crime, said Sanram Wyden, the Democratic chairman of the committee. It is a massive, ongoing conspiracy to help ultra-wealthy U.S. citizens to evade taxes and rip off their fellow Americans. Do you think we will learn the names of the wealthy individuals who were evading taxes that were disclosed? How common do you think this practice was? More to come as this story as information is shared.